Welcome to TradeTheMBI.com. This is John's report is for the 15th and post-Valentine's Day. It was an exciting one because we started out with those inflation numbers, which was kind of a funny thing because how long have we been talking about that because of what we saw in oil? The difference is, though, what we've seen in the reaction of oil should have caused a bunch of people to wake up and say, hey, wait a minute, we had this big spike in oil and now we've had this big decline in oil. That spike that's causing inflation to rise is going to fade a little bit later on. So not such a big deal. And sure enough, things turned around. So this is coming off that GAN. We had already seen the midterm buyers here, short-term buyers. They're getting close to exhausted. We expected this to carry through, but we finally did get the orange momentum there going below red, which is giving the full 6-7 buy signal as well within this. But you've got zero shorts have been in this. I mean, this has been solely a buyer's return. So for all of the, and I always find it interesting. All the articles were, oh, you should be worried. Don't buy this dip. Don't buy this dip. And everybody not buying this dip allows the institutional guys to buy that dip. Isn't that how it always plays out? You know, they make a dramatic move, get everyone afraid, and just gobble up all of the weakness, you know, as people move to cash or whatever, and lo and behold, you get right back up to where you were. So we also see the improvement in the shakeouts, both in the NASDAQ as well as in the S&P. And that spiked the euro for no real good reason whatsoever, because everyone is into liquidating dollars these days. And treasury rates are rising nicely, heading towards that 113 that I've been calling for a little bit too long. Should have been there, but we're finally starting to see some real market behavior that matches the characteristics. And so this is what I was talking about from the oil. We had this huge run up. We filled in our positive extremes where they set this whole thing up. It builds in inflation. There was no question about that. Then the complete fade, though, on the back side of it is resetting it. So, but there's a lag. So we'll see how that impacts a couple months from now, and then everyone will calm down again. Of course, that gives gold the impetus to move its way back up. Put in a nice little buy signal back there. It's overdone a little bit, so it's going to have to fill it back in. But needless to say, it was enough excitement and momentum to get things going. Look at this 5. So this is a 5 KES. We started off with that pre-market. Beautiful short signal came in there, nice 20+ point drop, and then immediately we started getting buy signals popping through there. No reset of the steel, so it was like, okay, you got to prove it over the 23%. Once it got there, it was an opportunity to cover. You expected maybe the 50%. Once we get to the 50%, then it was like, what are we seeing? And there wasn't a whole lot of anything. We got a break that moved above it, but it came back down. But when it came down, that was when we started to get the signals here. You ended up with a whole set of new buyers because the cyan moved below red. You also had the steel resetting. And let me expand the chart a little bit. What we've got there, and we can start to see it a little bit clearer. So right here is where it broke out, moved to the highs, and you pretty consistently, even when you ended up with a couple of DOC spreads, you had full resets of the cyan there, and then you just ended up with another wave going through and maintained pretty much all positive shakeout. All the little resets in the shakeout were mild, didn't even get to the 50% in any of those cases. So pretty healthy from that standpoint, and has continued even into the pre-market right now. So you can see fully reset as well. So I think people woke up to the idea that no, the only thing that happened last week when that market caved was the memo release showing political corruption, and that's pretty much done with now. And everyone realizes the economy is still doing what it's doing, and you can't. This is the thing about, you know, overall shorts. Yes, we have the weakness, and we still may not recover fully just yet on those returns, but clearly things have reset, and we've been seeing some good intraday action. I don't expect that to change. Yesterday was a bit of an anomaly where we had a lot of one-sided up action, but we still ended up with a pretty decent down action, which took advantage of that when it took place, as well as the up action on the other way. So continue to do that. This has been very effective for trading, which is exactly the way the S&P should behave under normal conditions. So, as always, look for me on the Skype chat to put up anything relevant. Trade well.